What are stocks? Bees use honey to buy things, but some bees want to own part of successful businesses instead of just buying products. Imagine there's popular flower shop run by Smart Bee. Flower shop makes lots of honey profit, but flower shop owner needs more honey to expand business. Buy more flowers, hire more worker bees, open new locations. So flower shop owner divides business into small pieces called stocks or shares. Each stock represents tiny piece of ownership in flower shop. How do stocks work? Flower shop owner says, my business worth 1,000 drops of honey. I divide into 100 stocks. Each stock costs 10 drops. Bees can buy these stocks. If bee buys one stock for 10 drops, bee now owns 1% of flower shop. If bee buys 10 stocks for 100 drops, bee owns 10% of flower shop. When flower shop makes profit, bee gets share of profit. When flower shop becomes more valuable, bee stocks become more valuable too. Why do bees buy stocks? First reason is profit sharing. Many companies pay dividends. This means they share some profit with stock owners. If flower shop makes 200 drops profit and decides to give half to stockholders, each stock gets 1 drop dividend. Bee with 10 stocks gets 10 drops honey just for owning stocks. Like getting paid for doing nothing. Second reason is capital appreciation. If flower shop becomes more successful, stocks become worth more honey. Maybe flower shop opens 5 new locations and profit doubles. Now other bees think each stock worth 20 drops instead of 10 drops. Original bee can sell stocks for double what bee paid. This called capital gains. Third reason is ownership rights. Stock owners get to vote on important business decisions. If flower shop wants to start selling nectar too, stockholders vote yes or no. More stocks bee owns, more voting power bee has. Some bees buy stocks because they want say in how business runs. Stock market. Bees need place to buy and sell stocks easily. This called stock market or stock exchange. Think of it like big buzzing marketplace where bees trade stocks all day. Most famous stock exchanges have names like New York Stock Exchange, NASDAQ, or London Stock Exchange. Bees can buy stocks in morning and sell same stocks in afternoon if they want. How are stock prices determined? Stock prices go up and down based on supply and demand. If many bees want to buy flower shop stocks, price goes up. If many bees want to sell flower shop stocks, price goes down. But what makes bees want to buy or sell? Usually it's about expectations. If bees think flower shop will make more profit in future, they buy stocks. If bees think flower shop will make less profit, they sell stocks. Types of stocks. There are common stocks and preferred stocks. Common stocks are what most bees buy. Give voting rights and chance for capital gains. Preferred stocks are different. Usually don't give voting rights, but get dividends first. If company has problems and can only pay some dividends, preferred stockholders get paid before common stockholders. There are also growth stocks and value stocks. Growth stocks are companies expected to grow very fast. Maybe new tech company that invented amazing flower picking robot. Stock price might be high compared to current profits, but bees think profits will grow quickly. Value stocks are companies that seem underpriced. Maybe old reliable flower shop that makes steady profit but stock price is low for some reason. Stock market indices. Instead of tracking every single stock, bees use indices to see how overall market doing. Most famous index is probably S&P 500. This tracks 500 biggest companies in Hive economy. If S&P 500 goes up, it means most big companies doing well. If S&P 500 goes down, it means most big companies struggling. Other popular indices include Dow Jones Industrial Average and Nasdaq Composite. Benefits of investing in stocks. Historically, stocks have been good way to grow honey over long time. Over past 100 years, stock market has averaged about 10% return per year. This means if bee invested 100 drops in stocks and left it alone, after 10 years bee would have about 260 drops. Much better than keeping honey in jar under bed. Stocks also help protect against inflation. When prices go up, companies can usually raise their prices too. This means their profits go up, which makes their stocks worth more. So while inflation makes honey worth less, stocks often become worth more honey. Risks of stocks. Biggest risk is that stock prices can go down. Sometimes way down. If flower shop owner makes bad decisions or new competitor opens better flower shop, stock price might fall from 10 drops to 5 drops or even 1 drop. Bee could lose most of invested honey. Stock market is also very volatile. Prices can change quickly based on news, rumors, or bee emotions. If someone spreads rumor that flower shop owner is lazy, stock price might drop 20% in one day even if rumor isn't true. This volatility makes some bees nervous and causes them to make bad decisions. There's also company-specific risk. Even if overall stock market doing well, individual company might fail. Maybe flower shop gets sued, or owner gets sick, or new regulation makes business illegal. Diversification helps with this. Instead of buying stocks in just one flower shop, bee buys stocks in many different companies. How to invest in stocks. Most bees use stockbroker. This is company that helps bees buy and sell stocks. Many brokers now offer apps that make trading very easy. You can buy stocks with few taps on phone. Some brokers charge fees for each trade, others offer free trading. Many bees also invest through mutual funds or ETFs. These are like baskets that hold many different stocks. Instead of picking individual stocks, bee buys share of basket. Professional fund manager picks which stocks go in basket. This gives bee instant diversification without having to research every company. Investment strategies. Some bees try to time market. They buy when they think price is low and sell when they think price is high. This is very difficult and most bees who try this lose honey. Other bees use dollar cost averaging. They invest same amount of honey every month regardless of stock prices. Over time, this smooths out market volatility. Long-term investing usually works better than short-term trading. Bees who buy good stocks and hold them for many years often do better than bees who constantly buy and sell. This is because stock market generally goes up over long periods, even though it goes down sometimes in short term. The future of stocks. As hive economy grows and more companies go public, stock market becomes more important. New technologies create new types of companies to invest in. Basic principle stays same. Bees who own pieces of successful businesses tend to build wealth over time. What do most bees say? Start early, diversify investments, and think long term. Because in stock market, time is sweetest ingredient of all.